Alrighty, so Fubo, Elf, Cake, EL, these stocks are moving huge. Why? I'll tell you why. The reason these stocks are moving so massively is look no further than the Russell 2000 here today. Russell 2000 was up about 2.5%. Now that's a banger of a day for a Russell 2000. Huge day for the Russell 2000, okay? If people start wanting to take risk and they feel more comfortable taking risk, what do they look to buy? Well, obviously they look to buy like stocks like Nvidia, Tesla, Palantir, those sorts of stocks. After that, what do they look to buy? They look to buy small caps, Russell 2000. Always a great indicator of are people feeling like they want to take risk or not take risk, right? Now, the Russell honestly hasn't done anything for the past year. Imagine for a moment if the Russell actually starts kicking into gear. Do you know what's going to happen with stocks like Fubo, stocks like ELF, stocks like Cake, and even some of these turnaround plays like an EL? Do you know what's going to happen with their stock prices if all of a sudden this Russell starts going up 5%, 10%, 15%, 20% for the remainder of this year? It's going to mean monumental moves in regards to these stock prices, and the prices you're seeing today aren't even going to be in the same ballpark as they would be if all of a sudden the Russell goes up, let's say 15% for the remainder of this year. Because look at the way these stocks move just off of a 2.5% move for the Russell. Keep that in mind, right? Remember, a lot of these stocks have still a lot to prove, right? Fubo's still waiting on that deal to go through. When that goes through, that's going to be huge. ELF, we're still waiting on their earnings and confirmation that the business is okay. That's going to be huge for them. Cake, obviously, we need to just see continued growth in the numbers, right? And then EL's a turnaround play. So imagine as these stories get told more, and then you get a Russell to start actually performing well. Whoo-wee. Now, I literally just posted this in my private stock group. I just posted this, okay? And this is in the breadcrumb tab in the Discord chat. I said, if you ever need to feel better about the future market performance, just remember Russell 2000 is down 10% on a 4-year basis, folks. 4-year basis, down 10%. Not up, down. Think about how much inflation we've had over the past 4 years, right? I said the Russell will eventually go on an epic, multi-year run. We're going to get a multi-year run in the Russell. Has it already started? Maybe. Maybe it has already started, right? By the way, I need to take off my jacket because I'm telling you, man, it's getting hot. It's getting hot here in Vegas, baby. It's getting steamy. Oh my gosh. It's getting steamy in Vegas. I need to turn on the AC. I need to start running the fans. Woo-wee. The summer's about here. That's all I got to say about this, man. I was in the pool all weekend. Oh my gosh. So when the Russell makes this multi-year run, my gosh, are we going to have some fun in some of these stocks that have been kind of beaten down dogs? Because just remember, always remember this. It's very important for everybody watching this to remember. If people are worried that interest rates are going to go higher and higher, people say, I don't want to hold small cap stocks. I want no piece of them. And we've been in a higher interest rate environment and worries of higher interest rates and whatnot for a while, right? As soon as you can get that cycle to break, people are going to come flooding back to the Russell. Like you could see the Russell performance, coming out of the great financial crisis, it was tremendous. Why? Because people were confident interest rates were going to remain low for the next several years. And they did, right? And you certainly didn't have to worry about rates going up in any meaningful way for years to go in the future. So if we get confidence around, let's call it treasuries yielding less, the Fed funds rate being less for the next several years, people feel a whole lot more confident about going out there and buying small cap stocks. And you'll see just massive amounts of money flood into those stocks. And remember, we're talking small cap stocks. It doesn't take a lot of money to obviously increase all of those stocks' market caps immensely, right? So that's some food for thought there. If all of a sudden these fund managers start saying, you know what, we're pretty confident that rates will either go lower or stay stagnant for the next, couple years, they're going to come to the Russell and they're going to flood money into the Russell 2000. And remember, like if you look at the Russell and how it performed under Trump's first term, did very well. Like look at from, the time he got in office until essentially, right before Rona happened essentially, right? And the Russell was performing tremendous. And so, everybody's not wanted to be in the Russell, but just don't be surprised at all if the Russell performs very well under the Trump presidency. We'll see how it all shakes out, but don't be surprised at all, right? Now, next up here, consumer confidence. People are shocked. Oh my gosh, they're shocked by consumer confidence and the improvement that happened there, right? Consumer confidence improves for the first time since November. It's been a while since Americans had an inkling of optimism about the economy, right? Huge move up in regards to consumer confidence. And like I said, I believe it was the biggest or one of the biggest we've seen since the great financial crisis. Why is this? You got to ask yourself, why is all of a sudden the consumer feeling better? Well, all of a sudden, we're not having tariff headlines thrown in our face every day. That's obviously been lightened up. So that whole fear about tariffs and all that, mitigating, right? At the end of the day, people still got their jobs. So that's being handled. Doge, there was a lot of worries early in this year, especially in that first quarter, about Doge. And everybody in government's jobs are going to be cut. What does that mean for the economy? And that led to a lot of uncertainty, right? And Doge has been slowed down immensely by other branches in the government, essentially, right? In regards to, like, people had this false assumption that Elon was just going to be able to gut everything and do whatever he wanted. No, there's a lot of checks and balances in government. Nothing moves fast. And a lot of the stuff that I'm sure he wanted to get through, he ended up not being able to get through, right? And he probably can't speak openly about the subject, right? Because he doesn't want to hurt his standing with Trump and the other politicians. But at the end of the day, if you could talk to him behind closed doors, I bet you he would tell you that. And don't be surprised if he talks about this openly a few years from now. I bet you he's going to say, like, you can't get anything done in government because they just block everything you do. Don't be surprised. I'm already telling you interviews that you're going to see years from now with Elon Musk, okay? Just wait on that. So people are feeling like, okay, the government's not going to get cut, in that meaningful of a way. Okay, tariffs aren't going to be nearly as crazy as we thought they were going to be, right? Where's inflation at? Inflation's dead. Rents are going down. Rents are going down or staying stagnant in almost every major market I look at. Home prices are either going down or staying stagnant in basically every home market I look at. Car prices stagnant or going down in every vehicle I pretty much look at. So I'm seeing a continuation of that. Grocery prices are stagnant or down. Gas prices are down across the whole United States of America and pretty substantially, right? Which, the far majority of people still drive internal combustion engines. They have to go to the gas station, and gas prices are always a huge indicator. Like, why do gas prices matter so much? Because this is huge. Listen, it's not just about, hey, let's say it's a two-person household, right? You got the wife and the husband. And the husband spends less, $15 less on his work truck, and the wife that has to drive, she's a nurse, and she has to drive to the hospital, she spends an extra $10 less a week, right? So together they spend, $25 less a week, let's say, in gas versus last year. You might say, what's the big deal about that? $25, like, over the course of a month, that adds up to over $100, which means one more time or two more times you can go out to eat, right? Or more money you can have toward a vacation. So it's more money in your pocket, which is just a good feeling. But it's bigger psychological. If you have to drive anywhere in the United States of America, you drive by 1 million gas stations, right? And your brain sees those gas prices, and even if you don't care that much about them, it sees those gas prices. And if it's going up and up and up, you start to feel a little worse, especially if you have to, pay for gas, like almost everybody does, right? For the trucking industry, it's massive. Dude, like you could be talking about several $100s extra in fuel just by small changes in what a trucker's paying for fuel 1 year versus another year. It's not small amounts. And then add that up over a course of a month, add it up over a course of a quarter, a 3-month span, add it up over the course of a year. If you're a trucker, you could be talking about over the course of a year, if gas prices are lower than they were the previous year, you could be talking about, easily thousands of dollars, if not tens of thousands of dollars of difference in fuel price. It's not small amounts, man. If you're talking about the gas prices just down 30 or 40 or 50 cents a gallon, which is what it's been. So that's what you see in consumer confidence pick up. The jobs are still there. People aren't losing their jobs. Doge has cooled down. Tariff stuff has cooled down, right? Gas prices are lower. The people aren't feeling the inflation pinch anymore. So now you're getting into an economy that is like, okay, we don't have inflation. We got jobs. Wage increases are there. And then you're starting to see some of the tax bill stuff that's going on, which we'll see. It still has to get through everywhere, right? But it's looking pretty good. And that should be an overall tax cut when you really dive into the nitty gritty there. That should be a tax cut for people starting next year, which I'm sure, for the people that care about that are very excited, right? So at the end of the day, people are like, okay, things are looking a little better. Now, keep in mind, these consumer confidence numbers weren't great. It's not like we have some booming consumer confidence that like everybody's feeling great about the economy. It's just a huge improvement over what they were feeling, which was very, very bad just a few months ago. So things are moving in the right direction there, right? Now, that leads me to the market, because people, if we go back to, a month and a half ago, people were like, there's no chance of this market hitting new highs this year, right? And what I've been telling you guys, I'm like, don't be surprised if we hit new highs in June or July. That's what I've been telling you guys. Like, don't be surprised at all. And these people acted like there's never a chance. We're never going to hit all-time highs. We're not even going to get close. And now I'm like, look at the market. Imagine making a prediction earlier that we weren't even going to get close to new all-time highs. Never mind beat all-time highs. Now you're starting to get nervous. You're like, what the heck? Like, we're almost to all-time highs. Imagine we blow through these all-time highs in June or July. Oh my gosh, right? You got to understand something deeper about the market. And this is what I've been explaining really for this past month and a half. And it's around this very important subject. What I'm showing you right now is AI and investor sentiment, right? Just like there's consumer sentiment for an average consumer, there's sentiment surveys around how investors are feeling for the market the next 6 months. And we just had a flip over to more people bullish than bearish. Now, very small flip. We only got 1 percentage point, so only 100 basis points more of people on the bullish side than bearish side. But with that being said, it is a flip. We now finally, for the first time in several months, have more people bullish than bearish on the market, right? Now, keep in mind, there's a long way to go here. We're not even still close to our historical averages. So we got a while to go here. But you've got to understand something much deeper about the market, okay? Listen, and I've been explaining this, I'm going to keep explaining this. Sentiment drives stocks in the short term. It drives the market in the short term. How are people feeling? Go back to all the stuff that was going on in April. It was all, I'm feeling. And that's why the market was going down. Trump tariffs, I'm scared. That might hurt the economy really bad. That might cause this problem and that problem, right? Feeling. Oh, look at how bad investor sentiment's getting. Oh, look at how bad consumer sentiment's getting. Feeling. We weren't seeing it in the hard data, right? You look at company earnings, look good, especially for all the companies that really matter to the stock market. They look great. Earnings are great from the far majority of companies. Guidance, look pretty good. Conference calls, pretty dang good. So, therefore, what do you got to go off of? And so now, ever since we hit those kind of lows in April, the sentiment's been improving. And the sentiment is what drives the stock market and what drives stocks in the short term. It's all sentiment driven. If the sentiment's getting worse and worse and worse from consumers, from investors, the stock market goes down. If sentiment gets slowly better, you know what happens? The stock market goes up and up and up. And so you can be in time periods when, earnings are fine, earnings are great, but yet sentiment's going down. For instance, look at what happened. We had all those earnings come out in the first quarter, all in February, right? For the most part, some started in January, but for the most part, they started in February. Company earnings look great, but yet the stock market started falling after February 19th, even when we were still in earnings season, and earnings looked great. And it started falling more and more, even though we had no proof of the market being bad. Why? Because sentiment was getting worse. Consumer sentiment was getting worse. Investor sentiment was getting worse. So stock market was going down, even though we had no proof of earnings being bad or anything like that, right? Now we're in a flip. Now sentiment's getting better and better. And because sentiment's getting better, the stock market's going higher. So, Trump can do this, Putin can do this, blah, blah, blah. It doesn't matter. As long as the trend of sentiment's getting better and better, you go higher and higher and higher. It's a pretty simple game. Now, if you're wondering what drives stocks in the stock market over the long term, that's all driven by earnings. Earnings. If you want to know if a stock's going to do great over a 5-10 year span, if you want to know if the stock market's going to go up a lot over the next 5 to 10 years, what happens with earnings over the next 5 to 10 years? I can tell you, if the S&P 500, if their earnings double over the next 5 years, the S&P 500 will roughly double over the next 5 years. It won't be perfect, but it's going to be pretty dang close. If you tell me, the earnings of the S&P 500 go up 300% over the next 20 years, we're going to get about a 300% gain in the S&P 500 over the next 20 years. If earnings go down 50% for the S&P 500 over the next 5 years, right? Some Great Depression happens. Guess what? S&P 500 is going to go down about 50% over the next 5 years. It's a pretty simple game. So earnings drive it over the long term, over a 3, 5, 10-year span. But in the short term, over a few weeks, few months, sentiment drives this whole show, man. It drives this whole show. And if you're wondering, can we blow through these all-time highs and set new highs on the S&P 500 on the NASDAQ? Absolutely. Just keep sentiment getting better. Consumer confidence gets better. AI investor sentiment gets better. You'll see us bust right through all-time highs and, to way, way higher highs than what we even reached earlier in the year. So do keep that in mind, right? Now, AMD. What happens with AMD if NVIDIA stock goes, hits new all-time highs tomorrow, right? 150 plus. I'll put it very simply. AMD will skyrocket. What happens if NVIDIA crashes 10%, 15% on their earnings? Well, AMD is going to get hit heavy. Very simple. Like, NVIDIA matters so much to the semiconductor space that at the end of the day, like, if NVIDIA reports earnings, the stock goes up big, it lifts the whole semiconductor space, and it will lift AMD as well. If it goes down huge, it's going to sink AMD as well. So could you see AMD 120 plus? Yeah, sure. As long as NVIDIA comes out with great numbers, great guidance, and then starts talking about we're already taking orders for 2026, boom. NVIDIA will be 140, 150, if not 155 a share, and you'll see AMD push to 120 plus. Simple game. Simple game in regards to that.
Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That is my personal advanced software that I use to make my investment decisions when I go to invest in companies. As somebody that's been in the market 15 years, I got sick and tired of using these different services that folks have out there that are designed for traders in the market. People that are looking to get in and out of stocks. That's not what I'm here to do. I'm here to long-term invest. I need to be able to see all the different ratios and metrics that are very important for me as a long-term investor to judge if I'm getting a great deal on a stock or if I'm getting ripped off on a stock. I need to be able to compare different companies versus each other and be able to do that in a matter of seconds rather than it taking hours like it used to before I created this service. I want the ability to listen to conference calls, see SEC filings all in one service. That is what we've created with 1000xstocks.com. If you are looking to access this software, go down to the description area of this video. You can click the link down there and apply for access. If you don't want to do that and you want to search a website, go to 1000xstocks.com. Enjoy it.
Cake is a growth demon that is priced so dang cheap. And when I say growth demon, what I mean with this company is they have the next 10 plus years of growth like on lockdown, basically. I think you're going to see accelerating growth rates for this company for the next several years. And I think they're talking about, I believe they want to open up about 25 restaurants this year. I think they're going to be able to push that number to 30 to 40 next year, probably 50 plus after that. So my opinion is you're getting I view Cake for this next 5 to 10 years as a growth company, as a growth stock. I believe I'm just early in regards to calling it that. And I think you're going to see other people call it that as these years tick on. And they're going to be like, oh, shoot, man, they got several different restaurant concepts that are popping off and like getting, massive amounts of reviews and success. And like they're always busy and things like that. And so we've got what I view as a growth company moving forward, trading at value dividend stock pricing. You're looking at a forward P of 12 to 14 range on this company. Like, come on, man. And they also pay a sweet dividend. So I get to make money from the stock going up. I get to make money from just collecting that dividend here. And so, I can sleep very well holding Cake stock, right? Celsius is really exciting this year. And the reason being is I'm expecting their core business to get back to very nice growth in the back half of this year. And then the Alani deal's obviously gone through now, so you're going to start to see those numbers start to hit. So Celsius is going to be very fun in regards to revenue growth, starting even in the next quarter. in regards to seeing that number and skyrocketing. Margins and profitability are going to be more of the story next year, and especially the back half of next year. So right now we're about to go into a revenue growth cycle again, very exciting. And then I think we're going to start to go into a margin cycle, profitability cycle in regards to Celsius. Nike. Hey man, let's talk Nike. Listen, I'm 0% worried about Nike. 0%. 0%. Everything I'm seeing from Elliott Hill and the management team there since he took back over the ship, it's all pointing in the right direction when it comes to Nike. I am 0% worried. I think Nike's going to be a sweet moneymaker. And the thing I like about Nike is I like to hold some stocks in a portfolio that I could feel comfortable holding for years to go in the future. Not like I feel comfortable holding the stock for the next, 12 months. No, I want a stock that I feel comfortable holding 5, 10, 15 years from now. Nike's absolutely one of those companies. As Estee Lauder is as well, EL stock, right? Neither of those stocks have gone on a run yet. So EL stocks are 3.6% weighting in the portfolio. Nike's 5% weighting. Wait till those ones go on their run and see how big the weightings of those ones actually get. Those ones, you just got to be patient with these turnaround companies. You got to be patient with them. At the end of the day, EL owns some of the best brands in makeup, perfume, cosmetics, right? Nike is a one-on-one freak anomaly brand that is just generational. So both those I have full confidence in. Adobe, just a kind of an easy money maker. Adobe, at the end of the day, they have all their subscription products. They just continue to, they're like a SaaS-like business, right? They got the recurring revenue streams that just keep coming through. It's beautiful. Forward P of 20 on this baby with double-digit top-line, bottom-line growth. It's easy. It's easy. It's an easy buy, man. Some stocks you just are very easy buys, not stressful at all. And that's Adobe, which is also like Google, right? Google's the same exact situation. Like, I understand everybody's worried about ChatGPT and what LLMs mean for Google and how Gemini is going to compete in that space over the next 10 years. I'm 0% worried. 0%. I don't, doesn't stress me out. Elf on a shelf, right? Higher risk, higher reward. But man, if you want to talk about a company that's executed as well as any company in the world, I'm not talking in just makeup beauty. I'm talking, if you want to talk about one of the best companies of executing for the past 5 years in the world, look no further than Elf. No, analysts are under this assumption that growth is going to be hard to come by for this company for the next year and a half. I don't believe that's going to be the situation. I think Elf's going to put up very good growth. Do I think they're going to put up the insane growth rates when they were growing like 80%, 70%? No. But I think they're still going to put up strong double-digit growth. We'll see. But at the end of the day, I hold this is, you got to look longer term with these sorts of companies. You got to, in my opinion, a generational brand here in makeup and cosmetics. You don't throw out those babies. You don't throw out those babies. Okay. Next up here, SoFi. This is a 2% weighting in the portfolio, $65,000 position. In regards to SoFi, we're talking about bank, fintech of now and the future, right? I like the way they're positioned. I like Anthony Noto. I like the way he's running that company. There could be a buyout candidate over the next few years. I wouldn't be surprised if a bigger bank tries to gobble him up. I hope they don't get gobbled up because I think SoFi they're on the path to become a financial giant. And I think that's what they could pull off over this next decade, right? And so I like to be invested into a financial giant, and I'm glad I got to 5,000 shares in the public count. Fubo, obviously higher risk stock, certainly, right? Streaming player, as long as that Disney deal goes through, banger, man. Very, very excited about that. That should go through later this year. There's always a potential it doesn't go through, and that would be, no bueno. But the balance sheet's looking in the best place it's looked in many, many years. The losses have been cut down immensely. They're talking about getting to profitability sooner rather than later. And then that Disney deal goes through, like sleeper. It's a sleeper $3 stock, but don't be surprised if that one's, if we fast forward a few years from now, don't be surprised if it's a lot higher than that. Honest, another kind of sleeper stock here, 1.7% of the portfolio, 11,211 shares. Here, $54,000 position in the public account. I mean, you talk about a company that's just executing on a very high level. Honest is one of the most well-run companies the past, I would say, year and a half. of any small cap company you will find in the entire stock market. Phenomenal. Revolve here, up 51% on this $152,000 position. Revolve, great management team there, great income statement, great balance sheet. I like that one a lot. Their profitability is coming back very, very quickly. The Planet's just kind of like a, speculative. We're just kind of waiting to see there. A little bit more of a lottery ticket stock. That's why it's 0.7% of the portfolio. Nothing too serious in regards to that one.